GoLogin is the best browser for multi-accounting. GoLogin is a platform that enables users to manage multiple browser profiles.
Yeah, that's bullish order flow. And then vice versa in a bearish market. You see?
Yes.
Comes back down, mitigates, comes back down, mitigates. So this is order flow, which means they're going from mitigation to mitigation. Okay, that's
Okay.
order flow. That's order flow. Now, on the 4-hour, we can see order flow right here. Okay, came back down, took out liquidity from both of these lows, and then you see this order block right here that got mitigated.
Your voice is audio is pretty low. Like
now, can you hear me?
Yeah.
Sure. No.
If you can increase it a little bit more.
Okay, give me a minute.
Okay.
Okay, now can you hear me?
Yes, clearly.
Okay. And then, like I told you, we have this clear order block right here.
Yes.
Okay. And then what did price do? Went back up and then came back down. Mitigated, right? Now where is the order flow? Right here. Because now people can say this is a order block. Okay, people can say that this bearish candle is a order block. Okay, but really what happened was this: price went higher. Okay, it went higher, and then look at this candle. Okay, look at this candle. This is where this bearish candle closed right here.
Yes.
Okay, the bearish candle closed right here, and then this candle opened right here. Okay, it opened and then it dropped back down like this.
Yes.
Okay, they came back down to mitigate this, and then it went higher. You see, now the best thing about the wick is that it acts as imbalance and also as an order block. The wick, okay, the wick acts as imbalance and also as an order block. Okay, because why? There were sellers pushing it down from right here. Once it opened, sellers pushed it down. But what happened was, once it came back down here, buyers started pushing it higher. You see that?
Yes.
And then buyers took the upper hand. They pushed it back higher, which means now there is a lot of selling and buying pressure on this wick. Okay? You see that?
Yeah.
And then, so now, where is the money? Where is the money for real? Not this candle right here. Okay? Money is now here on this wick, because now I told you why. You see that? Because once it opened, it was a selling candle. And then later, the buyer started pushing it back higher. Okay?
Yeah.
Okay, which means now you know what an order block is, right? That's a sell to buy candle.
Yes.
That's a sell to buy candle. You see this order block? It came back down, took out liquidity from all of these lows, and then went back higher, which means now this is a bullish order block.
Yes.
Okay, this bearish candle is a bullish order block. So now the same thing happened right here on a lower time frame. Price came back down, sell to buy. You see that? Sell to buy. You see that? So now the money is on this wick. Their money is on this wick. I told you.
Yes.
Okay, I hope it's clear. You can ask me if it's not clear.
I do have a question.
Yeah, what's it?
Let me annotate it. It's like what happened is, like, this was a sell candle. Then they started buying it.
Yeah.
And then if we can, we see like this, then they again sold it right here, right? So like.
So yeah, they sold it back again.
Yes.
But on this single candle, what we can see is that buyers finally took charge of it, right? Because you see it closed, it has closed above the opening price.
Yes.
You see that? Which means now it's a bullish candle.
Yes.
Okay. Price opened, and then now this is the story behind that wick.
Yeah.
Okay.
I understood the story behind the wick and why you are saying that the money is sitting here. But like from the concepts I have learned, like when we are in a range like this, and the sell candle which breaks this range is where the most of the money is sitting.
Yeah, but who taught you then?
Hmm?
Who, like, where did you learn that from?
I learned this from Anjet, I think. Anjet.
NZ. Okay.
Yes.
But the thing is, okay. But the thing is, you see now, where did the real bearish momentum came into the market on this week, right? So like,
Yes.
what is it right here? Nothing, because this is where the sellers originally pushed the market back down, right here.
Yes.
Once this candle opened, because now there's nothing above here. Okay, there's nothing. So there might be something, because there needs to be something. So price came back down and then it mitigated something. But then why did
Yes.
this wick come back down here? If all the money is right here, why did this wick come right here? Because I told you the liquidity is in this wick. Okay, their money is
Yes.
in this wick. Okay, you see that? Because okay, now there might be orders right here. So that's why they came back down right here. But then ask yourself, why did it come back down right here? If the money was right here. You see that?
Yes.
Yeah. And then the next thing about a wick is, okay, the wick will always have an order block or an imbalance on the open of it and then on the 50%. Okay, on the open and then on the 50%. Because I'll show you some example. Let's see, let's look at this, the same thing. Okay, now say we're looking at this or this thing. Say we're looking at this long wick. Okay,
Yeah.
now this is the 4-hour time frame. If we go back down to a 15-minute, this is what we could see. So that's all I can go. That's all. Okay. See that? I told you there will be an order block. First one will be on the open of the week, and the next one will be on the 50%. You see that?
Yeah.
Okay. I hope it's clear. First one will be on the base of the week, which means the open of the week, and then the second one will be on the 50% right here.
Actually, I didn't understood it. This big concept, like.
Okay. Now this is how a week will be formed. Okay. Now say this is a bearish week or a bullish week. Okay. Price will come back down.
Yeah.
Okay. And then it will go back higher.
Yes.
Okay. Go back higher. Now this, can you see that? Price even breaks this structure right here.
Yes.
Okay. Now this is a 4-hour week. Price opened, it came back down, and then it broke structure. Okay. It doesn't necessarily have to break structure, but I'm just showing you one single candle. Okay, price
Yeah.
came back down. Okay, sellers pushed it back down, and then the buyers took the upper hand, and then they pushed it back higher
Yeah.
from right here. So you have seen this, right?
Yes.
Now there wouldn't be just one single candle like this. Okay, there'll be multiple candles like this, like this. You've seen that, right? There'll be
Yes.
order blocks. There will be order blocks on a lower time frame. Now
Yes.
imagine this. Now imagine this was a 15-minute time frame. Okay, there will be an order block right here. There will be an order block right here. You have seen that, right?
Yes.
For sure, you would have seen that. So
Yes.
now
Yes.
I'm talking about just one single candle. This is a 4-hour week from this
Okay.
high to this low. That's a 4-hour week. Okay,
Yes.
so now on the week, that's the same thing. Okay, so if it's a 4-hour week, on the 15-minute there'll be multiple candles, right? There'll
Yes.
be multiple candles. So that's it. So don't overcomplicate it. That's just simple. That's simple. The first one will be, okay, the first one will be on the 50%. Okay, now if you take this wick right here, like I told you see, the first one will be on the base of the wick right here, on the opening of the wick. Okay, because
Okay.
on a lower time frame, price went back up and then it came back down, which means First, once this candle was opened, okay, once this candle was opened, buyers pushed it back higher, and then sellers pushed it back down lower, which means
Yes.
now there will be an order block right here, right? And
Yes.
then you see how price came into the base of that wick. You see that?
Yes.
Okay, and then the same thing here. You see how price came into that opening of the wick. You see that accuracy here? We
Yes.
don't have to go to a lower time frame to refine this. You see that? Came into
Yes.
the base of that wick. So if you can follow wicks, that's better. Yeah? Even right here. Yeah? You see that? I told you. First one will be on the base of the wick. Yeah? You see? Came back down. This has been mitigated. So right here, the base, the first order block has been mitigated. So where is the next one? On the
In the middle.
50%.
Yeah.
Yeah. See that? See that?
Yes.
So
So are you trying to say that
that's
the
simple. Yeah,
are
what
you
is it?
trying to say that an order block will be mitigated twice?
So
First at the base
not
and then at
twice,
the
not
middle.
twice, not twice. Okay, I told you this order block. Okay, I'm sorry, this week,
Yes.
this acts as imbalance plus order block. Okay, two in one.
Yes.
That's a two in one. This week acts as a two in one. Okay,
Yeah.
so there will always be two order blocks. Okay, two order blocks. One would be on the opening of the week, and then the other one would be on the 50%. So that's not one order block. Okay, there'll be two. And I'm talking about the lower time frame. Okay, now this is the 4 hour. This is the 4 hour.
Yes.
So I'm telling you what happened on the lower time frames. Okay, I hope it's clear. That's very simple.
Yes.
Don't overcomplicate it. Okay, that's very simple. This is how we take it. The first one would be on the base of the wick, and second one would be right here. So even if this has been mitigated, even if the one that was lying on the base has been mitigated, we know that price can come back down into the 50%. Okay, now this is additional stuff, so I'm just telling you. Okay,
Hmm.
so you need to know this stuff. Okay, that's very basic. So have you
Actually,
watched
no,
ICT?
nobody ever told me about it like this.
Yeah. So have you watched ICT?
No.
Yeah.
Like I tried
So
watching
this is
ICT,
what he
but like
calls a
it was
rejection block. That's too long, right? No
yeah.
matter
It
what.
talks about a lot of
But
stuff which is
he is
not
the one
important.
who tells you.
Yeah. Can you like
No,
your
no, no, no.
voice is
He
all
talks about
again?
most important stuff.
Uh,
Now, am I clear now?
yeah. Now it is clear.
Okay.
So what were
Then
you saying about ICT?
yeah, so he does not talk about useless stuff. He's the one who really talks about
Yeah.
the useful stuff. This NJet
Uh,
and everyone, they just copy all of their stuff and then rename their concepts. That's
yeah.
what they do. It's bullshit. Then if we go to the 4 hour, like I told you. Now, this week, this week was created by news. Okay, which means now even on the 15 minute, this would be just a week. Okay, but we know
Yes.
that there will still be money on the week, even though it was created by news. Okay, and then okay, let's ignore that week for now because that was created by news. And then I told you about now I'm gonna tell you about this thing, this week right here. Okay, so I
Mhm.
told you where will the first order block be?
On the
On the
opening, on the base.
opening. You see how price this opening of this candle, it came back down and then mitigated. It mitigated this. Then
Like
where will the
in
next one
the
be? Yeah,
yeah,
what's it?
in the case of this cell candle, uh,
Yeah,
let me
this thing.
annotate it. Like what must have
Okay.
happened is like it went like this, then it closed like this, right?
Yeah. It,
So
it,
this
it,
must
it
be our
sold and then it bought.
uh, this should be this whole cell candle should be our order block, right? In
Yeah,
that
now,
case.
so there wouldn't be just one single candle, right? There wouldn't be one
Yes.
single candle. There'll be like this,
Yeah, there will be
one
multiple
like this.
candles.
Yeah, there'll be multiple
Yeah.
candles. So then, so right here, like this, I'll tell you. Now, I'm talking about the week. This is what would have happened on the lower time frame.
Yeah.
Price sold back down like this, and then buyers started pushing it back up. Okay, that's what would have happened. You see that?
Yes.
This is what would have happened. Okay, so
Yes.
like I told you, this acts as an order block and as well as an imbalance. Okay, so now you see there'll be imbalance from this low to this something right here. Okay, and then we even have this order block right here. Okay,
Okay.
hope it's clear. It's very simple. It's very simple. You don't have to overcomplicate it, because now say we have this and then this once again. Okay, like I told you, the
Yeah.
first one would be on the opening right here, and then the second one would be on the 50% right here.
Yeah.
Okay,
I got it. Yeah.
okay, awesome. And then right here, now what happened here was price came back down and then it pushed back high. So I told you, first one will be on the opening. You see, that has been
Yes.
mitigated by this candle, by this wick. Came back down, mitigated, and then went higher. So now we know where is the next one, on the
In
50%.
the middle. Yes.
Yeah, see that? On the 50%. See how price came into it. Okay, you see that? You see how accurate? See, we didn't even want to go to a lower time frame to refine it. Just from the 4 hour, we got it. See, that's
Yes.
where exactly price came in. So that's what I did. Okay, I wanted to buy from here, but this happened with news. Okay, this happened with news. So you know, during news, spreads will widen up. Okay, spreads will widen up, so we cannot buy it from this low right here. Okay, so I
Okay.
bought it from here. Okay, and then so you know about liquidity, right? Where liquidity, and you know about
Yes.
liquidity. Now the problem comes when you're going to choose an order block, right? Because there will be multiple order blocks all over the place, like all over the
Yes.
place. Okay, so now how do we determine the right order block? Okay, the right order block.
Yeah. That is the
So
biggest
now
question.
this works every time. Yeah. Okay, I'll tell you. Now this works all the time. Okay, this works all the time. Now, before choosing an order block or a point of interest, okay, now if we're in a bullish market, it needs to rest in a discount price. Okay, and
Okay.
then okay, in a bearish market, it needs to be in a premium price. But what
Yes.
makes it high probable? Yeah, what makes it high probable is liquidity must be fed into our point of interest. Okay, liquidity must be fed into the point of interest, which means now if we are in an uptrend, okay, if we're in an uptrend, say this is what happened, because price does not move that perfectly. So this is what it would do. Okay, we had a break of structure right here. Okay, we had a break of structure right here, and then I told you, I told you. Now to determine the right order block, there needs to be liquidity fed into that point of interest, which means now can you see these equal lows? Okay, can you see that?
Yes. I can see that.
Okay, so we have equal lows. So we know that equal lows will be taken out. That's basic smart money. You know that,
Yeah.
right?
Yes.
We do not buy from equal lows. So now, if you have an order block right here, would you trust it?
No.
No. Why?
Obviously, there are a lot of chances that the smart money, the institutions will take out this equal lows because
Yeah,
a lot
for sure
of
they'll do that.
stop losses are there.
Yeah. So now, what we would do is we would determine something right here. Simple. Below it, because now you know that this will be taken out. So that's it. So price will take out all of this liquidity and then tap into this. That is it. So it's not that hard. See how liquidity has been fed into this POI right here. You
Yes.
see now there are stop losses. Now these stop losses have been fed into this POI, which means now once these stop losses have been taken out, price will which means the market makers are now in profit because the retail traders or the breakout traders or anyone, the people who trade support and resistance, now they will place their stop losses right here, right?
Yes.
If they buy from this equal lows, their stop losses would be right here. Okay, so now where their stop losses are is where our entry point is. Okay, I hope
You
it's
are
clear.
not audible
So they
clearly. Okay.
now,
Now you are. Yes. Like it start when you were explaining this
okay,
something
I'm
like
sorry for that.
it stopped.
Yeah, there's some issue with the connection. Can you hear me now?
Yes. So can you explain from here again, like what you were explaining here?
Can you see?
Yes.
Yeah, sure, sure. So now, can you see how liquidity has been fed into this POI?
Yes.
Because now the people who trade support and resistance would view this as a support. Okay, and then
Yes.
people would even look at this as this M pattern. You see that?
Yes.
This M pattern line. All of those crazy stuff. Okay, and people now even the breakout traders would place their sell stops below this. So now you see how liquidity has been fed into this POI. We have
Yes.
all of these stop losses resting just above it, which means now you know the price will do this. It will take out all of these lows. Now what they do is to trap more and more people into this. They'll come back down and then they'll even give a reaction from this equal lows, which means now even more traders would jump in,
Yeah.
right? They'll give a huge
Yes.
reaction like this, and then comes this, the manipulation. The
Yes.
manipulation straight into our point of interest, and then boom, that's it. You see, there needs
Yes.
to be liquidity resting just above or below it. Now, in this case, there needs to be liquidity resting just above it. You see that?
Yes.
How,
Yeah.
how liquidity is just chilling. It's just chilling above it. You see that?
Yes. This
Okay.
markup looks like one of the recent trade you took on GU.
GU. Yeah. I'll show you. So we'll go to the 1 minute time frame, and that's like magic. I'll show you everything on the 1 minute time frame. Because you can stack up orders every time. You would have seen my channel, right? Like I
Yes.
take
Yes.
orders out of everywhere.
Yeah.
This is what I do. This is basically what I do. That's all. Okay.
Okay.
I'll just show it to you because once we go into the chart examples, you understand it better, and you even have the recording so that you can watch it, rewatch it, and then once you back
Yeah.
test, you'll see what I'm talking about. Yeah. So and then on a lower time frame, I'm sorry, on a bearish market, this is what would happen. Price will come back down, and then you see it creates this little resistance right here, equal
Yes.
highs, equal
Yeah.
highs, and then it will come back down. So now, would you trust any of these order block? No, right? Because
No. Yeah.
what is the reason for you to trust this? There, I told you, if it's a high probable point of interest, there needs to be liquidity fed into it. Okay, there needs to be liquidity fed into that point of interest. Now, you see, there's nothing. No liquidity has been fed into this. No liquidity has been fed
Yes.
into this. But
Yes.
which one has liquidity resting below it? See that? This,
Yes.
because there's a ton of liquidity above this. This is a liquidity pool, and then people would even do this.
It is.
Yeah, what's it?
Your voice was stucking again. Like.
Ah, shit. There's some issue with the connection. So am I clear now?
Yes.
Okay, I'm sorry for that. And then you can see this now. Just this little resistance being formed just below our POI. Okay.
Yes. Yeah.
So now we know what price will
It
do
is
is
stucking again.
is it some problem with your connection or my connection?
Uh, I think my connection is working fine. Let me check. Okay. Can you give me a minute?
Okay. Yeah, sure.
I'll just check.
Okay.
I don't think it is a problem with my connection. Like I tried playing a 1080p video, so like it was playing without any buffering.
Yeah. So if it happens,
Yeah, it is still stuck. If you are
you
speaking
can
something,
just
I
tell
cannot
me.
hear.
Okay.
It is still happening.
Still? Okay. Give me a
Yes.
minute. Okay. Can you hear me now?
Yes.
Okay. I'm sorry for this.
Like sometimes it happens that your voice completely goes out.
It goes out. Okay. So if it happens, just tell it to me. Okay. Tell it to
Yes.
me if it
Yes.
happens. Okay. Now, can you see how this resistance is being formed right here?
Yes.
Okay. Which means now this acts as a pool of liquidity because we have tons of top losses above this.
Yes.
Okay. So now we can expect this. We know that equal highs has to be taken out. Okay.
Yes.
So now the stop loss would be our entry. So price will do this. Now what makes this high probable? What makes this point of interest high probable is the liquidity resting below it.
Yes.
Okay. Now price will come back up and then boom. That's what they would do. Okay.
Yes.
Okay. Now
Sometimes
yeah.
something like this might also happen that this is our order block, and like the
Okay.
price went with a lot of momentum, and it came like down here, and it created liquidity here.
Yeah.
It will
And
also
then even
be
this, yeah, even this would make it high probable because now we have equal lows just below this.
yes. Okay.
Okay. Okay.
Yes.
Now, so once it comes to liquidity, okay, once it comes to liquidity, not only double tops and double bottoms act as liquidity.
Yes.
Okay.
Yeah.
Now, what the retail
GoLogin is the best browser for multi-accounting. GoLogin is a platform that enables users to manage multiple browser profiles. GoLogin is the best browser for multi-accounting. GoLogin is a platform that enables users to manage multiple browser profiles.